I wasn't on the road overnight or anything. Got home early evening yesterday. Was able to make it to my daughter's orchestra concert. Go ahead and share my screen and take a look at what's shaking around the markets here today. Today is the 18th, May 18th. It's been raining a lot here in Indy, but I don't know if you know anything about Indianapolis, but the month of May is usually a very, very crazy time in Indianapolis because the month of May is the Indianapolis 500 festivities. So that's been going on here this week. A couple things to chat about here today. Let me start off with a mistake I made yesterday. As you know, I was on the road, and I make mistakes. You've seen me make them, and I made a big one yesterday. And I just want to talk about it real quick, just because this is just a lapse in this is just a memory lapse, a brain fart, if you will, that happened to me yesterday or last night, in just the last 4 hours, actually. We had taken this trade right here to short the pound. I took it yesterday in yesterday's morning class. I put my stop right up above the swing high, risk 50 to make 75, and it went sideways a bit, but then it started coming down, and the trade looked really good. The error that I made is it got within like 4 pips, I believe, of my take profit level right down in here. The thing is from being on the road and not paying attention and just being, just not being organized enough, I guess, yesterday, I kind of made an assumption that I had, just from looking at the charts, that I was in good shape, and I forgot to move my stop down. And so what turned out to be a trade that I had 71 pips in of profit, when the claimant count, when the actually employment reports came out in Great Britain this morning, I honestly assumed that I had hit a take profit, and I wasn't even really checking. I didn't even check my trade, but I still had my stop right up above this swing high, and this is just an error, just a lapse in judgment, I guess. And yesterday I was making a point of telling people to make sure they manage their risk and manage their and move those stops down. And at the very least, if you used a 3-bar reversal right down in here, you would have probably gotten out with at least a 25 pip gain. At the very, very least, you should have gotten out at a break-even point. But that was what ended up happening to me. Is I logged into my computer just about 3 or 4 hours ago, and it actually would have been about 3 hours ago. And instead of seeing like a 50-point profit or at least a 40-point profit or from moving my stops, I see that I lost 50 pips. I turned a 71 pip gain into a 50 pip loss. And that's a 121 point swing in the market that I literally, quite literally, just really screwed the pooch on. So that was, you live, you learn, and that just comes from really not paying attention. And so, these markets, we always talk about how fast they can whipsaw you in and out of trades. And this is just a good example of even me, making a mistake, a lapse in, an error in judgment, not concentrating, not focusing, and, getting stopped out. That's a hard pill to swallow when you turn a 71 pip gain into a 121 point loss. And that's how I look at it, is I lost 121 points, not just 50. I lost 121 points. So lesson of the day is, that's why it's important that we manage our risk and we keep moving those stops down. So that was a bit of a bummer for me. After having a horrible week last week, that nothing should have really gone bad for you yesterday. There should not have been any losses yesterday from our trades. There should have only been gains, unless you're an idiot like me, and then everything is pretty much in play. Still keeping things rather simple here today, of just really looking at, trading the market in either direction. You can see this big move up on the pound. If you're wondering what that came from, that was their employment report. Should have pretty much, at the very, I forgot to even mention this yesterday, and that's my fault. I'm just a bad instructor. You should have closed. This is like trading, holding a trade on pound is the equivalent during this announcement is the equivalent of holding a dollar trade during non-farm payrolls. I should have given you a heads up on that yesterday to make sure you close, because we were short the pound, at the very least, to close the pound at 4:25 a.m. So a lot of tactical errors were made yesterday, a lot of them. And I apologize for that. But if you're wondering why the pound went up, the expectation on their claimant count was a rise. So this, basically their unemployment rate was for it to rise 4,000, but instead came out at negative 2.4. That was actually a really good number. They did adjust the previous number to 14.7. However, that was a pretty big adjustment, but it still caused the pound to make a steady move to the upside. Their average earnings, which is another important one, most of this stuff, 3 out of 4 is good when it comes to the pound. Their average earnings came out at 2%, up from 1.7 previously, and they actually adjusted the previous number on that to a positive 1.9. So that was all good news for the pound right in through there, and that's what caused this big move up in the pound that we see right in through here. So that's what stopped me out of my trade. Should have stopped you out of yours, and that's what made me screw the pooch here this morning. So anyway, moving on here, got to shake it off because there's nothing you can do about it really, is looking at different types of trades that we can put on for today. Well, the thing is that I don't have a problem double dipping back into the pound today, but you want to be very cautious. The one good thing about the pound is it's moved about 170 points. In fact, let's go to the pound here, because I still think there's shorting opportunities here on the pound, even though they have good news. That fundamental news is, I believe, will be short-lived, and I think it's got some room to go here. We want to be kind of careful as far as how we would approach the pound today, but still there's some, not to say that we should be aggressive, but we should still be looking at, shorting opportunities, mainly because in this case on the pound, it's moved, roughly 160 something pips to the upside. So it's already extended quite a bit of its upward momentum. Yeah, and it really hasn't been making that much headway on the, it's still making a lower high here on the LP trend line. It's still, it's still been kind of sidling out up here towards the upside. I would have no problems shorting this sucker again, because I think that there's still a lot of downside risk on the pound, and I think that this at this resistance point right up in here, at this 145.63 level, and if you look at where it's found support, it's almost right in here at like the 45.39 level. I would have no problem shorting it. What I would look for, though, is you need to use some good confirmation here. If it can bounce, I think that it can retrace back down. In fact, I think it can blow right through the 4,500 level if it does make a retracement to the downside. But we'd have to be extremely careful in how we approach it. One thing that my thought process is just let this upward momentum kind of take itself out of the equation and wait for a reversal. In this case, and this is not me wanting to get any type of revenge on the pound, if you're using PitView, this would probably be the best case scenario, is essentially like a 1-bar reversal, or if it keeps on coming up, looking for a 3-bar reversal, but looking for it to break into a new low. If it does break into a new low, You know, there are retracements that we can be looking at here because it is coming up towards the 4,600 level. And if it goes -5 on the 1 hour totals, so look for a reversal. Here I can kind of, let's go to a 4 hour and I can kind of go back a little bit further here. Like right here, you know, you can see some resistance here. This high right in here is right near the 4,600 level, like 4,573, and that's where it's kind of breaking off of right now. It's not a very strong resistance level, but the other thing that you can look for is looking for any type of retracement, but it would take a while for it to get to a more of a retracement level. The thing is, I don't see it going to like the 4,600 level. I mean, that's why I'm kind of looking to trade it a little bit more aggressive. You know, if it does continue up, like let's say it continues up and it breaks through that 4,600 level, then I would simply look for it to come back down and close below the 4,600 for a long-term play. But you'd have to be kind of quick on the trigger because you'd want to look for any type of reversal to occur. It's gone so far past it. It's gone, you know, quite a bit above its average range that it generally has during the day. You know, your other option for an entry is looking for a 3-bar reversal. You know, kind of treat it like a stop order. Which would basically mean that you'd be waiting for it to come back down below 4,500 at this point, but who knows how long this can stay up. You know, what I would say is, you know, if you get a strong candle back to the downside, you could also look for a touch and close off the 61.8 level. That would be another option, of course. Here, let me draw that fib level. That 61.8% level is right at 4,600. It should be right there. So let me change this back to a I just think with how precipitous this move has been to the upside that it could make a pretty strong move back down. I'm at the right single bar, touching close of 61.8 level, which is also the 4,600 level. I mean, this does give you quite a few options when it comes to the pound. You can see it's starting to make a move right up there to the upside. Yeah, it's still coming up. Here, I'm going to take that off real quick. One pip above swing high. If you hear snoring in the background, yes, I did forget to lock the dog away, and he is snoring away. We also have the FOMC meeting minutes coming out here at 2 o'clock. Essentially be looking to sell into a reversal here. Or retracement opportunities. It certainly gives you a lot to work with. I mean, I'm going to be watching this pound throughout the day and just waiting for any sign of a reversal. A touch and close off the 61.8. I mean, that's you can see where that 61.8 is, right at the 4,600. So I mean, that would certainly be a nice opportunity in my opinion. Switch gears here. There's a couple others I'm looking at, and take off this text right in through here. Take all this text off. There we go. Don't text and trade. Turn that back over to the euro dollar. And I'm actually going to kind of divert my focus here a little bit from, from that pound and from some of the European currencies. I'm going to kind of divert myself to look at, there's one thing that did get brought up by a student. Sorry, I got a little ADD this morning, but this actually doesn't look too bad. We've had a kind of Gartley City been forming on the dollar yen. Check this out. I got an email from a student on this one. We had a Gartley form overnight on the yen from this swing high when it came down to 61.8. Bam, bam, bam. Came right down to the 78.6 and jumped right off. You see that ABC correction right in there, and that's pretty awesome. And then when you look at it on the flip side, that was a bullish Gartley. And check out what it's done right in through here. It's made another little ABC. A comes up to approximately the 61.8 level. Made a B. And made a C right up in here. $78.6. I mean, it's not perfect or anything, but it's still a nice little ABC correction that it made. And you can see it's kind of dancing right in here at the mid 109 level. I think that if the yen being one that's been prone to be range bound. By the way, global markets are slightly down today. Like the Dow's down 60. I think the S&P is down like 4. NASDAQ futures are down 10. So looking at a little bit more bearish momentum in the market here, but kind of got to like this little ABC correction. And now that it's kind of calmed down a little bit, I was looking at this one earlier. I didn't jump on this just because I wanted to kind of feel myself out a little bit, but this may not be a bad short-term opportunity right then here to go short the dollar, because if it closes below this level, we could look for it to retrace further to the downside. Everything's showing the dollar as being kind of weak today, except for the yen. The yen's really not following suit. And then you could put your stop right up here above this high, which is 109.558. So stop. I don't know if this is going to be the swing high. since it's a small amount of risk, 1-to-1 risk reward on the first lot. Move your stop to break even and look for limit 2 of 1 to 1.5 risk reward. I mean, this low right here is 109.293. This high right up in here is 109.558. So you may be only looking at like 26, 25 pips of risk. That would bring you right down to the 109 level, but you could maybe look for a larger amount of reward potential. I was mulling that one over this morning before class, but I'm emotional just like anybody else. I get a little emo when it comes to mistakes I make in the market. So I was still kind of licking my wounds from that really bad error that I made on the pound overnight. So I really didn't jump into anything this morning. And that could at least give you a little bit of a short-term opportunity for a bounce, at the very least, if you know what I mean. And then the other ones that there's several on here that I think are good candidates today. I'm kind of staying away from euro dollar and the Swiss. Those had kind of made their moves. You could have gotten the Swiss when it closed above 9,800. You may not have reached a profit level on that. You probably would have been stopped out with a 3-bar reversal. Because that was, we were looking to trade either dollar. We never got a dollar weakness trade on the euro. It never closed above that high. It just sat there and skirted that high and then came back down. So dollar strength kind of ruled the day against the euro, and it ruled the day against the Swiss, starting to rule the day versus the pound until it got stopped out, or until it reversed course because of news. These commodity currencies, now that we have that yen on there, in the pound, of course, but these commodity currencies present some pretty interesting situations when you look at them. Like here, let me get my bearings here. Okay, there's the dollar CAD right over there. Oil has still been holding up quite well. Just over the last hour or so, it had made this kind of really steep trend line. You can see how it's kind of making this double top formation over in here. You got 1, 2, 3, and horse poking its nose through the fence line right here. But it's just right there at the 29.74 level, and you look at how much, you see how it came up towards this 130 level right up in here. You kind of got to like that, the fact that it's making such a severe bounce. I mean, it came up and bounced really hard off that 130 level. You see how that's like 129.93, so it made a really nice bounce there. And here's 29.45 right down in here. Same thing as the yen here on the CAD. I would look at this as almost being like a double top. This is a little bit of the horse poking its nose to the fence line. But you got this nice amount of selling pressure right up in here. You got some indecision at the top of this trend. You got a doji, then you got some spinning tops in here. So there's quite a bit of consolidation and indecision right here on this dollar CAD. If we can get a close below, I would look at that as kind of a reversal pattern. It would be closing below this trend line right in through here, this longer term trend line, and it would be, it's a nice little area right in there for a potential trade opportunity, and just kind of view it as more of like a double top formation. You can put your stop, 1 pip above the swing high. I don't think you have to put it all the way up here, but just 1 pip above the swing high. And once again, you got to take advantage that, if we get even a close beneath this level, we may not have a huge amount of risk on this trade. So if you can do more than one lot, you gotta love it when your computer makes that noise. Boing. My wife gets so pissed whenever I don't mute my computer because I leave it on often over, at night. And sometimes if I'm watching a video or something, I'll have the volume on. And she gets so pissed because sometimes I'll forget to mute the computer when we go to bed. And so, because I need to leave the MetaTrader, I usually leave the MetaTrader up. My computer will hibernate, but I usually leave the MetaTrader kind of running at night on my computer, and then all of a sudden she'll get woken up by that boing, boing. The kids will be woken up too by their mom screaming, "Turn that damn computer off." All right. And the same goes for some of these other commodity currencies in here, like both you can see how kind of correlated the Aussie and the New Zealand have been on these charts. They're kind of making the same patterns. Historically, both of these are very much consolidated to one another. But, these are both been coming down and making some retracements, and they're kind of hitting off their floors here. If you look at kind of where the long term, this is like a long term 78.6% retracement on the Aussie from this swing low where this started. It's coming down to a 78.6 level on the daily chart. And also the New Zealand's not as it's not as clear, but you can see it's coming down from this swing low. That's the same point of impact from here down to a 78.6 level. That's both on the daily charts. And if you look at both of them on just the regular hourly charts, you can see these little 78.6% retracements occurring on these. Now they're not perfect by any means, but you can see how they've made the same types of retracements on here. And I think that's, I don't think we, kind of going back to our old school way of trading Aussie and New Zealand, not really looking to short these if they break through a low or anything. I know these have been making some pretty big downward moves here, but when you look at them, over, as far as retracement opportunities, you can see how they both kind of popped up to these to their 61.8% retracement levels, like this swing high on the Aussie, and right over here on New Zealand, right at this swing high. And you're not looking at a whole lot of risk. Remember, these tend not to move like the pound and the CAD and some of these other commodity currencies and European currencies. They move a little bit slower. See you, Mr. Phil. I may have some dental questions for you at some point, but I'll email you those. Wanted to get your advice. Let's see here. Listen to that dog go. Brinkley, go to bed. It's like, I'm not doing anything wrong, man. Stop waking me up. put this over here. So I mean, you can almost pick one on here. They're probably going to move in tandem with one another. But once again, you know, you don't have to do dollar CAD in New Zealand and Aussie. These are just, for something about these commodity currencies today are kind of calling me, you know, or looking good right now. I already got the up arrow on there. I'll just or limit 1 and limit 2 on these. In fact, I should probably start, I should probably just start writing that out instead of just saying 1 to 1.5. If you can do one lot, I'd say you can, you know, go for 1 to 1.5. But the thing is, most of you can do more than one lot, and the best way to manage your risk is to, you know, if you can separate these things into 2 different take profit levels. There we go. Now, where you're probably going to, I know the market's open now, so we're seeing a little bit of a downturn in the U.S. markets here. But regarding today, the one thing that's going to kind of be a bit of a pain in your arse, if you will, is the fact that the FOMC meeting minutes are at 2 p.m. to this afternoon, 2 p.m. Eastern time. So that would be, what, 7 p.m. for you folks over in London. I'm not even going to do the time zone thing. But this is the only thing that I can see kind of throwing a wrench into everything, and that is the fact that you would expect, you know, whenever you're trying to analyze the meeting minutes, you know, it comes down to, are the Fed members hawkish, are they dovish, are they neutral? Now, well, we all know that when they had in the last interest rate announcement that they had, that they were more hawkish. They took out the concerns over the globe. They took out completely their global economic risk language, and they essentially left the door open for the possibility, not the probability, but the possibility, just giving themselves the okay should economic conditions warrant it, of keeping the option open of raising rates in the June meeting. So when looking at the FOMC meeting minutes, one of the simple ways for me to look at the meeting minutes is how did the last FOMC announcement affect the dollar? Well, it was hawkish. The dollar got strong. It actually kind of whipsawed up and down. So after the FOMC announcement, and that's what you would kind of watch out for here is any type of dollar whipsaw effect that we might have, because that's what it did during the FOMC announcement. You would look for the, in those meetings, you're going to look for more hawkish signs from the Fed members. If I had to call it one side or the other, you would want to err to the side of dollar strength, just because they did go from a very dovish FOMC statement to a neutral to hawkish FOMC statement in the last Fed announcement. So, if you had to call it one way or the other, should the FOMC meeting minutes favor dollar weakness or should they favor dollar strength? Just from the tone of the statement, you would think that if anything, it's going to favor dollar strength. Now, it's up to you here, because, the one thing that we generally see during the meeting minutes is we'll often see the dollar just whipsaw up and down. It'll whipsaw up, it'll whipsaw down, and usually end up in the same the same direction that it's in. If you're in a trade to where you actually have some profitability by 2 o'clock, your best case scenario is at the very least move your stop to break even if you have a trade that you may have some profit in. When it comes to trading around news announcements, I always look at, do I have a profitable trade on? Sometimes if you have a profitable trade, you can move your stop to break even, and if it comes out in your favor, let's say we end up being short on the pound dollar, and if the news favors you, if your stop's at break even, then if the news does favor the direction of your trade, then it can act as a steroid. It can kind of pump it up like a steroid and allow it to move even further in your direction, with having limited risk to the downside if you have profitability in a trade. If you're in a losing trade, let's say you're already down like 30 pips or something on the pound, that's probably where I would say, hey, you know what, you might want to think about closing that sucker out. It all comes down to what type of position you have on. I would probably say, if you're confused, or if you don't want to accept the risk, then just close your trade right before 2 p.m. because we have seen it in the past where those FOMC meeting minutes do whipsaw the dollar. And when I say whipsaw, I mean it doesn't have a direction. We've seen it with the FOMC announcement. We've seen it with the FOMC meeting minutes, that the dollar will get strong, weak, and then end up right back where it started. But it will make some pretty big moves in either direction. And if it does do that, if it does whipsaw up and down during those fundamentals as they happen, then you can wait till about 10 or 15 minutes after the announcement, wait for it to kind of simmer down. And you could always get back into the same trade, because after that fundamental shock, generally the technicals will take over. I don't expect anything that's going to reverse the trend of the dollar or anything on that. Let me go ahead and save this. So I don't see the FOMC meeting minutes creating a new trend on the dollar. I expect it to be kind of like the FOMC statement, but I would say that, if you're looking for which side the meeting minutes should favor, you need look no further than the actual meeting itself, which was more hawkish. It's kind of a dangerous time when in the markets, because I said it yesterday to my students, because I had heard a currency trader that was on CNBC that had said, the bad thing about the currency markets right now is that people that are either, there's long or short traders are, neither of them are making money, you know, especially when it comes to the more highly traded currencies, because they've been turning around so fast. So we're not alone in the fact that we've had a lot of whipsaws in our trading in the last several weeks, because it's been happening, you know, even to the professionals. So make sure you don't kick yourself too much, because you know, losing money is never fun. We've kept our risk pretty manageable, but it always gives you kind of a little bit more of a confidence builder when you know that you're not alone in your struggles. So there's that dollar CAD right up in there. Nothing's really working right now. Dollar yen's starting to make some upside potential. You can see pound is trying to break that 4,600 level. That is all I have for right now, folks, though. Let me go ahead and share the trading sheet with you. Because you all know that I give a sheet. There we go. So until tomorrow morning, folks, you know, just don't make any stupid mistakes like I did yesterday. Make sure you stay focused and manage that risk. That's the best thing you can do in markets like this. You know, you're not going to, this is not the type of market where you're going to be right 75, 80% of the time, or 65% of the time, or 60% of the time. This is a coin flip market right in through here. So you just got to be really, really, really careful about what you're doing. And when you have bad days and bad weeks, you don't want them to turn into horrible days and horrible weeks. So anyway, it hasn't been a bad week. I'm kind of close the door and turn on. Yeah, I'm gonna get that dog in the other room. So, you know, just remember, the only thing you can do is protect yourself in these markets, so that when you lose, you don't lose more than a certain percentage of your account. And, you know, just stay the course. You know, a lot of trading is just being patient. Just like those people that made all that money in the late 90s. It was people that had learned what they were doing, and they went through a lot of sideways and bearish market conditions, and then they were able to take advantage once the market started making those huge trends and make a lot of money. That's precisely what the markets are. They're cyclical. They're not always going to make sense, but when they do start making sense and start making sustained trends, that's where you can really make I've seen people get extremely wealthy off those types of markets. So anyway, just be patient and manage your risk. And, you know, at some point, you know, the market will not stay like this forever. So anyway, just a little bit of advice. So I will chat at everybody tomorrow morning. Thanks for coming in.